Tell us what happened. We're at 1904 right now as we speak on Monday. And this is a move that has been long anticipated, but it's finally been happening. What's been driving up the gold price?
Well, first of all, I think it's important to make clear that we had a big double bottom in mid and end of March in the gold market. And since then, gold is moving up step by step. It's not like crazy momentum, but it's a nice, steady uptrend. So we're up $230 right now. And I think it's basically the reaction to this 9-month correction that we've seen since the new all-time high last year in August. And yeah, gold probably still has some more upside here. I think 1920, 1923, this is the 61.8% retracement of the whole down move. So that's, I think, the minimum target in the short term. And maybe with some luck, the bulls have enough power to push it towards the 1950, 1960 resistance. That's where I actually think we might get a little pullback back to the 1850 kind of range. That's where the 200-day moving average is currently trading. And that would be actually the good launching pad then for the summer, where I expect the attack towards the $2,000 level in the gold market. So I think it's looking very nice. We had a nice big shakeout, 9 months deep correction. Been painful for many people who came too late into the gold market last summer. But yeah, gold looks good here. And I think it will pull silver also along.
So $2,000 by the summer. That was my next question as to whether or not we're going to reach $2,000 by this year. Now, $200 upwards is a pretty big move in a rather short period of time. And I'm wondering if you think we're about to hit some resistance after this rather substantial move. But you said we're likely retraced to 1850.
Yeah, I think 1950, 1960 in the best case. Maybe already 1923, that's where I see this kind of like current wave up kind of stalling out. And then I would see a pullback towards maybe 1850, 1840, maybe testing the former downtrend channel from the upside. So that would be a good buying opportunity if it happens over the next maybe 2 months. Typically, gold finds a seasonal low somewhere in June, July, and then starts a strong move up towards August and September. So that would fit the picture. Let's see. Any pullback in gold is a buying opportunity here.
Okay. We're talking about these charts offline, gold's relationship with inflation. And I had discussed with you how, according to my findings, gold's historic correlation with CPI has been very, very low. The correlation is rather inconsistent, shall we say. However, if you plot gold price next to inflation expectations, so future outlook of inflation. So if you take a look at GLD ETF versus the TIP ETF, for example, the TIP measures the Treasury Inflation Protection Security. Now that correlation is very high. So why is it that gold's correlation with historic inflation is low, but the correlation with inflation expectations is very high?
Well, first of all, I'm not a fan of the CPI index or data. I think it's a hedonistic approach to keep inflation numbers low. It has been changed many times, so the formula is not the same like they used, for example, in the 1970s. So I would suggest to talk to John Williams from Shadow Stats, and this will give you a very different picture than the official CPI numbers. And then the second thing I would say is CPI is looking in the mirror, while inflation expectation is actually really measuring the emotions and the expectations of the people. And that's why you would buy gold if you expect higher inflation. So it's no wonder that those two are basically going well in line with each other. Again, I think CPI is not a good way to look at the markets anyway.
Are there other variables you prefer to look at when it comes to measuring relationships with gold, like the dollar, for example, or interest rates, real rates? What else do you look at, macro variables?
I mean, in the really big picture, you look at the golden constant, which is for hundreds of years, basically, you could buy various things with 1 ounce of gold. You could buy a dress for a man, for example. You could buy with 1 ounce of silver, you could buy a chicken. These kind of things are established over hundreds, even thousands of years. So It has proof again and again that gold keeps your purchasing power over a long period of time.
This is an interesting concept, the golden constant. Now, you mentioned this has held up for thousands of years. I wonder if it will hold up against digital assets going forward. Bitcoin is relatively young. Been around compared to other assets. It's only been around for 12 years. It's nothing compared to gold. However, if you take a look at the gold to Bitcoin ratio, for example, it's steadily trending down. I wonder if gold will maintain its purchasing power relative to digital assets going forward. What do you think?
I've been tracking the Bitcoin gold ratio for many years already, and I've been publishing it nearly every month in my reports. And I don't think that gold can keep up with Bitcoin. But that doesn't make me put all my money or all my eggs into Bitcoin, because I want to have something that is untraceable, that works without electricity, and that also works without the availability of free internet. And that's why I believe you also want to hold gold. So I've been always saying you want to have both gold and Bitcoin. But it is true, and gold bugs have to accept that truth, that Bitcoin has been outperforming gold mercilessly over the last 12 years.
Uh-huh. Before we move on to Bitcoin, let's wrap up with gold now. Your outlook for the end of the year, let's say, for the price. Now, you mentioned $2,000 by the summer. What about all the way to December?
I would expect that we get another pullback somewhere between 2000 and 2050, 2075 later that year, but that gold will then make higher lows. So let's say we get this in the short term, this pullback 1850 over the next 1 or 2 months, then we run towards 2000, and then maybe the next pullback will end already at 1900 or even at 1950. And then you have this series of higher lows while we have a horizontal resistance line around the $2,000 level maybe. And then at some point later that year or early next year, I guess that gold can break out, run towards new all-time highs.
Okay, new all-time highs by the end of the year. All right, Bitcoin now. You wrote an article recently, well, May 22nd, it was released. Bitcoin is an earthquake in the crypto markets. What do you mean by that?
I was referring to the nasty liquidation and crash in the sector. I mean, over the last few weeks, we have seen that while Bitcoin basically was stalling out, it couldn't make really, or couldn't create more momentum on the upside. We had one higher high at 65,000, actually exactly on the day of the Coinbase IPO. And since then, it gradually went lower, while at the same time, Ethereum managed to double, which is already a warning signal. And then you had like all these crazy coins like Dogecoin, etc., going through the roof. And all these were really warning signals. And then, yeah, you had this kind of earthquake where suddenly everything started to crash due to all these liquidations. And that's basically what I meant with the earthquake. But as you can see, the market has already stabilized. And many of the smaller coins actually have recovered quite well. So I think we have to accept actually in all markets now crazy volatility. This is part of the cracker boom. And yeah, let's see. Bitcoin might need a little bit more time to digest this crazy price action over the last few weeks. But I think towards the third and fourth quarter, we're going to see new all-time highs in Bitcoin.